Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please refer to our important disclosures pages on the screen now. These can also be found in the description on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely, macro, and newsworthy geologic updates, both the positive and the negative news across our holdings as they arise. These videos represent the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress on our activist strategy in creating new economic metal deposits in viable mining jurisdictions around the world. The securities discussed herein do not represent an entire portfolio and in the aggregate may only represent a small percentage of a strategy's holdings. The issuers discussed may or may not be held in Crescat's client portfolios at any given time and may not be appropriate for all investors. This video is not intended to be, nor should it be construed as an offer to sell or a solicitation of an offer to buy any security, services of Crescat or its funds. If you enjoy our videos, please click on the like button and make sure you subscribe to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick. His contact information is on the screen now and can also be found on our website at crescat.net. So let's get started. Yes, we are live again, and it's great to be back. So this kind of rebooting our old format, and look forward to getting back into it live. So what are we going to talk about today? It's going to be the usual format. I'll go first with talking about macro and positioning, etc. Then Tavi with his macro presentation, and then Quentin will get down and dirty with the different news updates that we have across our holdings. So what are we looking at here? J.P. Morgan, the private bank. Believe it or not, J.P. Morgan is advising its ultra high net worth clients to own gold. Why is this unusual? Well, it's unusual because J.P. Morgan has often been seen as especially by the, by I guess what you might call the conspiracy theorists out there. Don't know whether it's been true at all necessarily, but people think that J.P. Morgan is one of the banks that's been holding down the price of gold, and so it's it is nice and refreshing to see that they're actually out there front and center recommending gold to their high net worth clients. I know I've witnessed one of these presentations in person, and this is real. It's part of their 2025 outlook. Here's some quotes from that report. We see a strong case for a continued gold rush in 2025. The commodity can play an important role in building resilient portfolios. Gold, the original safe haven asset, can serve as an attractive hedge against both geopolitical risk and uncertainty around sovereign debt and deficits. In a study of roughly 50 geopolitical events since World War II, we found that gold was a reliable near-term hedge against equity market volatility. And finally, we believe the US dollar is structurally overvalued. Gold is an efficient way to diversify currency exposure. They show this chart here, which is gold priced in Japanese yen, the euro, and the US dollar. And gold has outpaced major currencies, especially the yen. Gold's appreciating across every fiat currency out there on the planet. This is our global fiat debasement theme, which we have had for years. It's playing out right before our eyes. And it's important to note, and at the meeting that I went to, the JP Morgan guys, at least one of them, made a point of saying we are not recommending crypto. So they're recommending gold. They're not recommending crypto. We're kind of old fashioned here too. We like gold. We like gold. We like silver. We like copper. We like big gold, silver, and copper discoveries in the ground, trading at large cap discoveries, trading at micro cap and small cap prices. That's what we're all about. But but we're not so much into the crypto. Yeah, maybe we coulda, shoulda, woulda bought some Bitcoin, but it's not what we're about. Let's go on to the next. So what's going on in the jockeying for Treasury Secretary as part of Trump's administration? And this is the latest betting odds from today from Polymarket, and we see that Kevin Warsh is slightly in the lead over Scott Bessent to take for Trump to pick as Treasury Secretary. There was a really good Wall Street Journal article on this morning that kind of talks about what's going on here, and the idea that we think that this article mentions that Trump is considering is really having, and this is Scott Bessent's idea, by the way. Scott Bessent is a macro hedge fund manager. He worked for George Soros and for Stan Druckenmiller. He's a big Trump donor. Anyway, one of Scott Bessent's ideas is really that we have a kind of a shadow Fed president, a shadow Fed chairman in waiting, to take over for Powell. And so what the article talks about is that maybe Kevin Warsh is that guy, and he would come in. Kevin Warsh, of course, is a former Fed official, a Republican, an inflation hawk. He was there during the global financial crisis, he's kind of he might be the lead guy has been the lead guy to potentially replace Powell at the end of his term. So the idea is that maybe he'll come in as Treasury Secretary, and then when Powell's term is up, he would move over to Fed chair. Meanwhile, Scott Bessent might come in as the chairman of the Council of Economic Advisors and would move into the Treasury slot when Warsh goes over to the Fed. Just an idea of being considered right now. Why it's important is that both of these guys, Bessent and Warsh, especially Scott Bessent, I mean, he is a gold guy, and it's important to understand that he's being advised right now by Zoltan Pozsar. And who's Zoltan Pozsar? He was another guy who was at the Fed during the global financial crisis, who is like the expert on the whole shadow banking industry. He's the one who, when he was at Credit Suisse, he predicted the repo crisis in 2019 and gained a lot of fame that way. Charges a lot of money for his macro research. So it's important to kind of see, in the background, how this is all taking shape. Pozsar is a gold guy, by the way. How this could all take shape with both Bessent and Warsh becoming part of the administration. Let's go on to the next. Crypto. So this is, we're looking at the fear or the fear and greed index for crypto, and this was posted by Jason Gepford of Sentiment Trader on Twitter, and we can see that with the Trump victory. I mean, I think personally Trump just likes gold much more than he likes crypto, but he likes Bitcoin too. I think he wanted the votes of the crypto crowd. Nonetheless, there's been a little bit of a sell the news. I mean, gold has been a Trump trade, but there was a bit of a sell the news on the election, and now gold's starting to come back. So is some of the gold stocks as well. But there's still this insane greed going on with crypto. Personally, I think it's a bit of a diversion. I really do believe that the Trump administration is going to be looking to support the mining industry, is going to be looking to, to do something constructive with the gold that they have in the treasury, 260 million plus ounces of gold, more than any other sovereign. So it'll be important to kind of see what is evolving with Besant and Pozar, as the days progress here. Let's keep going. This was posted on Bloomberg recently by Cameron Cries. Bubble, toil and trouble. MicroStrategy, of course, with this crypto craze, has become the hot stock. And Tavi pointed this one out to me recently, and I mean, it's crazy. Cameron Cries, Bloomberg's macro strategist, says whatever you want to call it, paying more than $3 for MicroStrategy stock backed by only $1 of Bitcoin does not seem like a great idea. You got a stock, all it does basically is own Bitcoin. It's trading 3x of the Bitcoin that it owns. Again, it just seems a little speculative. I think the crypto stuff is a diversion here. We want to stay focused on gold. Let's keep going. So I showed these charts last time around. I've showed them many times, but I want to point out something new about these charts. And notice, here we're looking at the S&P 500 versus the Barron's Gold Mining Index in that 1972 to 1975 time frame. Why is this important? Because we had a similar large cap tech stock bubble. It was called the Nifty 50 back then in 1972. But notice that date, November 17th, 1972, when the Barron's Gold Mining Index hit a bottom. What was that? Well, that was a presidential election year, November 1972. It was Nixon getting his second term. And it was the beginning of a 376% rise in the Barron's Gold Mining Index at the same time as the S&P 500 declined 34% over the next 2 years. We think there's a similar setup today, similar counter-cyclical setup. Just note the potential uncanniness of that time of year, November, Republican presidential victory. This is November 1972. Let's go on to the next. What happened in 2000? Note the date here. Now we're looking at the large cap Philadelphia Gold and Silver Mining Index, which kind of took over for the Barron's Index as time progressed. But note the date here, November 13th of 2000, when what was that? That was an election year, a presidential election year. George Bush had just won the election and taken over for Clinton after his 2 terms. It was the beginning of a gold stock bull market. The very beginning. It was the very beginning of the crash in overvalued large cap tech stocks. The Philadelphia Gold and Silver Exchange would rise 393% from November 2000 to before the global financial crisis in early 2008. At the same time, the Nasdaq Composite was down 27% over that whole time frame. So another counter-cyclical period, another similar setup where you have overvalued mega cap growth and tech stocks, undervalued mining stocks, the beginning of a cycle. There is a business cycle. There is a macro cycle. And we think there's a counter-cyclical gold cycle that's setting up just today. So this was also November presidential election year. This one was a Republican sweep, by the way. It was a 50-50 Senate, but the tie-breaking vote with the vice president, of course. And we think it's a similar setup today. Let's keep going. So what's going on today? Well, November 2024. Republican sweep, Trump's second term. And that people will say, now we're looking at the exploration index, the TSX Venture Composite Index, which is a proxy for exploration stocks. 69% of the companies in this composite are exploration mining companies. A handful of them are companies that we own in our portfolio. We've helped them these companies make big gold discoveries. But look at what's going on here. So there was a whole decade of the 2000s. This index was launched in not until December of 2001. It went up 440% in those 5 or 6 years. Before the global financial crisis. Yes, there was a global financial crisis and gold stocks got hit, but we're trading 45% below the lows of the global financial crisis on this index today on an inflation adjusted basis. And so what is it? It's a counter cyclical setup. Overvalued mega cap tech stocks and S&P 500. We've shown that, 10 different ways. We'll show it a few more ways here shortly, but we have the counter cyclical setup. So think back to those other Republican presidential victory years, 1972, November, in 2000, November, today, November 2024. Yeah, there was a pullback in gold stocks, sell the news, but they're on the rise again. In the last several days, look at your charts and look at this setup. It is incredible. This incredible bear market and consolidation. Let's keep going. Why do we need? Why is the setup so extreme today? It's because of the overvaluation of the S&P 500 and the mega cap tech stocks in particular. And yeah, we do need to see that counter cyclical, the great rotation we've been calling it, for this to work. We need to see money coming out of these overvalued parts of the market and coming into this deeply undervalued precious metals segment. We're positioned for that across the firm at Crescat. And we encourage you to reach out to us to learn more about that and about how our strategies individually are each positioned in a little bit different ways for this. Let's keep going. I'm almost done. Just another little indicator here that we are, getting ready for this rotation. Insiders are selling at the highest ratio relative to insider buying in the history of this data series. This was posted in the Financial Times earlier this month. Insiders are selling. This is an important indicator to consider about the timing. Insiders are selling at a record level relative to insider buying. Maybe the insiders know something. Let's keep going. And that's probably it for me. So let's turn it over to Tavi.
All right. Well, thank you. Glad to be live here again. So hope you guys can hear me okay. I'll get started with my presentation. I'll start a little bit about some of extreme things I've been looking at and also, I guess, dive into the elections, some views on that as well, and perhaps another angle on the dollar once again. This is a chart that when you step back and think about how to value the stock market overall, there's plenty of ways to do it. Market cap to GDP, there is PE ratios, free cash flow yields. I personally really like the CAPE ratio from Robert Shiller, professor at Yale University. The main reason for that is because of this, the cyclicality factor of looking at the price relative to the average of 10-year of earnings of a company. And you can see this, it has a very long history. We're going back to the 1800s. You can see, times in history where things are very frothy, and you can sort of put it into perspective where we are today. And, today we're at about 38.1 in this CAPE ratio. you can, I think there's at least two very important observations to make here. We're well above the peak of 1929 in this calculation, but more importantly, if you listen to some of the guys who, in hindsight, realized that the 2021 peak of the market was very obvious. Today we're at 38.1. Back in that time, we're at 38.3. So we're not too far from the same calculation or the same levels of how expensive the market was. I think the big difference, however, is that back in those times, the interest rate was 1.5%, and today we're over 4% on the 10-year. And so this is a big difference when you're trying to anchor a valuation and justify why something is so frothy. So, to me, there's much more of a downside relative to the upside. And it's hard to make a case for asymmetry. It's hard to make a case on the risk-reward basis, especially when this is, been a level that has actually coincided with major market peaks as well. Let's go to the next chart. In the next chart now, we're looking at Microsoft. You can see earnings yield, just taking the 12 trailing months of earnings of the company divided by the price over time. So, you can see that Microsoft has been incredibly profitable and has made money over the years. It's not about making money. It's about how much you pay for that company that is generating cash flow or earnings. And so you can see here that you're paying about 2% of a yield on the earnings basis for this company. This is, by the way, if you do 1 divided by the 2%, you get the PE ratio. That's the calculation of PE. But you can see here very clearly that you're paying essentially the same that we were paying during that complacency period or complacent period of the late 90s and the early 2000s. Just another way to look at how things are frothy, even in a company that is doing well. Mega caps are profitable. It's not a question of that. It's more of a question of valuation. Let's go to the next chart. In the next chart, we're now looking at the 10-year yield because it's the anchor for valuation. Now, when you're looking at valuation, you also have to think about what you're paying for the cost of capital. Cost of capital is there's a lot of variables that go in towards understanding that. But at the very core of cost of capital is the 10-year yield. It's the long-term yields in general. And so you have here the 10-year yield, which is very liquid instrument that tends to give us sort of a proxy for where other things could be trading at. I will have another chart for junk bonds. That is another way to measure complacency too. But as you can see in this chart, it looks like we're probably breaking out on the 10-year yield again. And in my view, once we break out more decisively from this resistance that we're seeing, which is very similar to the resistance we saw in 2021, we're probably going to accelerate to the upside. And what does that mean for a frothy valuation of a company? This is precisely what happened in 2021. 2021, you're seeing that massive amount of issuances on the treasury side that essentially caused the market to reprice those frothy valuations. That was the time when ARK investments and most of the companies that had very strong or very high and hefty multiples had to be repriced in a very significant manner. And so it's something to think about, because if you go to the next chart, the inflation picture is actually strengthening again. And the natural gas prices, although they're falling today, they've been rising all week. Natural gas prices is one of the things that lead inflation. There are plenty of other things that have, somewhat of an impact in consumer prices. But energy prices is a very important one. Oil has been sort of going sideways recently. Not much of a move in oil itself, although energy companies have been doing well recently as well. But natural gas seems to have already bottomed if you look at this chart. Technically, for those who like technicals, this looks to me like a double bottom. And you can see the sort of momentum created in the first wave of inflation, and that potentially this could be and the second wave of inflation. And so I am paying attention to this. Another thing I would notice that I tweeted today, and I think it's also important, is that agricultural commodities also made 10-year highs today. 10-year highs. Nobody's talking about that. Those are things that feed into food prices, which are lagging agricultural commodities, but they usually, will sort of move in the same direction over time. Ammonia prices are starting to inflect higher as well. They're highly impacted by natural gas prices too. And so you can kind of see how these things are strongly correlated. And I would suspect that if inflation starts to really create momentum on the upside, and you can look at the break-even rates, which is inflation expectation, expected by market participants, investors in general that buy those instruments. And the 10-year is the duration that has most of the liquidity in that. And you can see as well that has been diverging from oil more recently. In other words, it has been actually moving higher, potentially ahead of some other things that have not moved yet. Because usually when you have inflation moving higher, it's very rare to be in an inflationary environment where energy prices stay suppressed. And it's just not, at least throughout history, it's not usual to see that. So my inclination of, when people ask me, what's your view in the oil or oil market overall, I'm an inflation camp for the next 5 to 10 years. When I see oil at these prices and I see call options for oil for $100, a barrel prices and so forth, extremely cheap. It's tough to, that's just one way to sort of measure complacency or lack of complacency in the oil space. In this case, I do think that looks attractive. The other way to measure that is just looking at the gold to oil ratio, which is one of the highest levels in history. So, when you're thinking about hedging, that's one that concerns me quite a lot. I can see, the deglobalization trends. We have all sorts of, issues with leverage and wars and conflicts. It would be very easy to see some sort of disruption causing oil prices to rise again in a very substantial way. And oil prices don't let you know that they're about to rise. It's just it's just that painful, upward movement in a very quick manner that surprises a lot of investors usually. And so, I given the fact that I am in an inflation camp, I can't help but be also an oil bull. Anyways, let's go to the next chart. In the next chart, as you start thinking about the valuation of U.S. equities, and I've been, this is not a new research per se, and it's something I've been developing over time in terms of a view and conviction, is Brazilian markets. I mean, it's a market that fascinates me because of the lack of interest, and also just seeing, we often talk about the junior markets in terms of mining stocks not working, despite the fact that gold prices are so high. But what about Brazilian equities? They're in the same position in terms of intrinsically, when you look at the fundamentals of most companies in Brazil, they're all doing well. They're all doing, really well. But prices are not falling. And so it's an interesting, proposition, because when you look at Brazilian equities relative to U.S. equities, you see one of the best differentials in terms of how cheap they are that we've seen in history. This is one example. It's looking at the Brazilian equity earnings yield, the same one that we were looking at Microsoft, versus U.S. equities, which is heavily weighted on mega caps. And you can see here, how cheap these things are. Usually people look at these things and they say, well, they're cheap for a reason. I understand. I think Brazilian equities should probably always be a little bit cheaper than U.S. equities. The problem is when things get too much out of the historical standard, which is the case here. The chart, I think it's well presented, showing the case that things are indeed at historically, undervalued levels for Brazilian stocks. So it's hard to ignore, such a I think that's sort of a 101 value investing opportunity, in my opinion. Let's go to the next chart. Let's see. So the next chart, or I guess headline, is a headline from a interview with a Bloomberg reporter 5 months ago or so. It was in July, that had an interview with Donald Trump. Was an exclusive interview, and I thought that was interesting because I've been developing this view on the dollar, and this is no surprise. I mean, it's been for the last. I guess if you're bored and you follow my work, you've probably seen that in the last month I've been turning extremely bearish on the dollar at the wrong time, because the dollar has actually been rallying quite significantly. But that doesn't scare me. I mean, if prices go a different direction from your view, it shouldn't scare you necessarily, but rather give you conviction sometimes, especially if the view hasn't really changed and the base for your case are still intact. And I think this is certainly the case here. My point of this is that Trump wants a weak dollar, and that's right there in the title of this chart. But Wall Street doubts that he will get one. And basically, the article was about how most of the policies that Trump is about to implement are going to cause the dollar to rally. And this is how the dollar has essentially been reacting. So the article has been right for the last 5 months. My position, however, is it reminds me of the investors and the people that follow markets. They used to say that policymakers would never create inflation again. This was the case, 4 or 5 years ago. And I remember this very well. And Gunlock, Jeffrey Gunlock one time said something that it actually was remarkable. He basically said, if a policymaker wants to create inflation, they will. All they have to do is print money and give it to the population and consumers. And in about 15 minutes, you should probably see a long line in most, fancy car dealerships. And surprisingly, after COVID, we actually saw something very similar. We did see money printing, or the expansion of monetary base, and checks were sent to the consumer to spend. And I remember going to the mall here in Denver. I'm not in Denver right now, but when I was in Denver, and looking at Louis Vuitton, and I saw this long line of folks, waiting to shop at the store, and that immediately came to my mind as a story from Gunlock. And I think that that's the same story here in terms of the dollar. If the president, especially Trump, wants a weaker dollar, you will probably get a weaker dollar. I do think that he does have it's not even the capacity, but he does have the ability to manipulate the currency to the value versus other currencies. We've seen this throughout history many times. Sometimes it's through accords, the Plaza Accord in 1985. We did see the Shanghai Accord in 2016. Trump is a guy who, historically has always liked to lower the value of its currency, export. He's a big fan of exporting, and so it's hard to ignore that as a potential policy that we may see. So that, I think that falls into, I guess what I'm trying to say is that it strengthens my view in a significant way. Let's go to the next chart. And if you look back to his first term, the DXY index was falling. Actually, when he started in 2017, the DXY actually fell about 14% in the first year. Then he started doing tariffs with China, and the market actually got quite wobbly. Actually, we had 2018 was a very difficult year for most money managers. We actually had a good year during that year. It was a very good year. And then the market fell apart again during COVID with the DXY index falling. But you can see clearly, I mean, this is not my opinion. It's just a fact that from the beginning of his presidency to the very end of his first term, the dollar was down 13%. And at one point was down 14% from its beginning of his leadership. And so the point is, the dollar, once again, I'm going to use somebody else's work, Dirk Miller and Paul Tudor Jones. I don't remember which one said it, and maybe it was both. But they said it before that if you want to see a strong dollar, what you need to see is two things: aggressive fiscal spending and very tight monetary conditions. I would argue that we may see the quite opposite of this. And when he said aggressive fiscal spending, we need to dive into that. It's not just fiscal spending; it's pro-growth fiscal spending. We are currently at the lowest level of pro-growth fiscal spending in 40 years. How do you calculate that? You just take out entitlements, because that doesn't create growth, and you take out one thing that has been surging recently, which is interest payments relative to GDP, or interest payments on the debt. And that has been basically eating out the lunch of pro-growth spending in a big way, more and more every year, more and more every week, essentially. And in my view, as we see the Fed being forced to actually cut interest rates on top of that, I think this can be actually extremely bearish for the dollar. So now you have Trump, now you have this combination of policies, and now you know as well that the whole world has a much lower interest payment to GDP level, right? Everyone used to say the dollar is the cleanest of all dirty shirts. Well, it used to be until 2 years ago, when we saw interest rates shooting up to levels we haven't seen in many decades, and with the debt that is in unprecedented levels, and that caused interest payments to surge. And now we're paying 5% of GDP on federal and state interest payments. When you look at across the globe, everybody's below 2%. So who has a sense of urgency to cut rates? Japan at 0.5% or the Fed at 5%? To me, it's nothing is obvious in markets, but it's evident from that perspective that one of the central banks is in a much bigger conundrum to act. And so to me, that's the Fed, and hence why I have this view on a relative basis that the dollar, the DXY index, is actually in the process of peaking. Let's go to the next chart. Next chart is looking at gold. I mean, gold has been making new highs, but you don't look at gold in nominal terms. Usually, in fact, if you do this chart on NASDAQ, it's doing a double top right now. In other words, it's retesting the level of the tech bubble. So if you look at NASDAQ relative to money supply, is my point. And right now we're looking at gold relative to money supply. And I think it's interesting because we did have a big decline of gold since elections. And elections are interesting because you have this big moves for the first week. And then you're about to learn which ones are real trends and which ones you should just fade it. In my view, the decline of gold was one of them that I would fade it. And I do think gold was went up too much in the short term, and it needed some level of correction. But it wasn't necessarily the fact that Trump got elected that should be causing the gold correction. That was just more like sell, buy the news, buy the news, sell the, buy the rumor, sell the news kind of event. And so I do think that if gold does break out from this money supply adjustment in this chart, we're probably going to see an acceleration to the upside. And it's going to be, the continuation of what we think is likely to be a secular bull market for metals. Let's go to the next chart. Next chart, we're looking at the silver miners. Well, I was looking at this chart because silver miners, recently I posted a chart that silver miners actually broke out from a pretty interesting resistance. We've been hitting this resistance in 2021, 2020, and then coming back down. And, it's been brutal just watching this thing, never breaking out. And then recently, we were also watching this with silver, right? Silver did exactly the same thing. We actually hit that line on the white line of this chart. We hit that same resistance or similar resistance multiple times. There was a silver squeeze moment. There was another moment where silver also reached that line once again. And then more recently it broke out. And I still see people being extremely reluctant to spread capital, I guess, or deploy capital into things that tend to have much bigger leverage to metal prices. Leverage, again, plays both ways. Metal prices fall. You should expect silver miners to fall further. But when silver prices are breaking out and clearly showing some fundamental, I mean, to me, the white line is what shows you fundamentals, right? The fundamentals are improving. The price is not following yet. And, the white line is essentially the potential free cash flow that you may see for most of those companies. It shouldn't be, I guess it should be clear that a lot of these companies should be making more money at higher silver prices, assuming that they're able to keep costs, at a manageable position, which I think will be the case. And so, I believe that this breakout line that we saw in the silver miners ETF, which is the SIL in this case that I'm using for the proxy here for silver miners, of which we're just retesting that breakout level. I think it's a matter of time for us to see much higher levels and actually get a momentum on this ETF at some point, and not ETF, but really the whole space of metals overall. Let's go to the next chart. Again, this is just my view, not Leslie. I think I'm getting to the end of my presentation. This is remember that chart of the 10-year yield rising and hitting that sort of resistance. Well, this is the other side of that. So you're now looking at, instead of the yield, you're looking at the price of the treasury market. And treasuries have been falling recently, and you can see that in the red line. And they used to have a very strong correlation back in 2021 or so, which to me marked a sea change in the macro environment. Was a time when higher cost of capital means suppression of or compression of multiples. That's what we see throughout history, especially during inflationary eras. And then since we saw the ChatGPT and all these things regarding AI, there was a separation of these two lines. And in my view, we're probably going to go back to that correlation being strong again. And I do think that the red line is the one that is essentially leading the way. And so I would pay close attention to this relationship as well, especially for those holding the 60-40 portfolios that completely collapsed during the years when those two lines were, working together. And now the separation makes it sound like the 60-40 portfolios are back. But I do think that those types of allocations in portfolios are probably, continue to carry a lot of risk, a lot more risk than what it looks like, because a lot of those calculations of risk are being used in the last 1 to 2 decades, where treasuries and equity markets have had a correlation that we don't tend to see during inflationary eras. Let's go to the next chart. And then I think this is my last chart, which is interesting as well. I mean, it just goes to show how extreme things have moved in more recent weeks and months. Last few weeks, we've had a really big decline in gold after Trump got elected. In fact, it was a little bit before Trump got elected. It was in October, kind of October 20th or so, was when gold started to peak. And then we did see emerging markets begin to peak as well. And equities outside of the US begin to also underperform quite significantly. Now, if you ask me, that relative performance of the rest of the world versus US equities, we're seeing something extreme right now. It's the worst performance for the rest of the world versus the US in 25 years. And so I think this is a trend that will probably be reversed in the next 5 to 10 years. I don't think valuations grow to the sky. And at some point, I believe we're probably going to be seeing, this relationship change in a big way. And leadership would change in a big way, in my opinion. Let's go to the next chart. And the one reason is one thing that we believe as well is the steepening of the yield curve, which has been recently here in the last week or so has been actually flattening, not steepening. But I don't change my views that way. I think you have to base your views on a real thesis. And usually when we have these levels of inversion in the yield curve, the uninversion period tends to be kind of abrupt. And we've had an abrupt movement from the bottom, as you can see in this line, the straight line that we've had in this year so far. A break would be absolutely normal, but I don't think this trend is over. I think we're going to go a lot higher. I think we're going to uninvert in a big way. And, not to be ultra bearish here, but that does have a very strong correlation with, or relationship with actually preceding recessions as well, or coinciding with recessions. And so, another one to think about it. But the 30-year versus the Fed funds rate just turned positive recently. And I do think that these yields on the long end are going to continue to move higher, in my opinion. And then on the other side, I do think the Fed is in a position where we'll probably have to cut rates, forcing this steepening of the yield curve to actually move potentially significantly higher. So again, those are just my views. I think this is my last chart, and I'll pass it on to Quentin if that's the case. Oh, one more. This is just looking at junk bonds and showing you, complacency. Basically looking at, look at the, why in the world would anybody, take the lowest rating for credit and buy a bond, to gain a premium of 2.65% over, risk-free rates, which is treasury market. And when people come to me as, it's because people believe more in a company than the government. Oh, please, come on. The government can print money as much as they want. You can't compare that with any other company. Nobody can print money like that. But anyways, those are my views. I'll pass it on to Quentin now, because I think that's my last chart.
Thank you, Tommy. Before the election, felt like we had a lot of wind in our sails. Everybody was feeling pretty giddy about the mining space. Since the election, metal prices came off a bit. They haven't plummeted, but it felt a bit like it was a mirage. Like what happened before the election was a mirage, and what we're seeing now is going back to a few months ago, like a year or so ago, where it just seemed like an endless desert. I don't think that's the case. I really see the need for metals. I know everybody's fixated on Bitcoin and other things right now. Guess what? Tech, Bitcoin, all of that stuff relies on expanding our infrastructure, especially electrical and supply, electricity supply. I think we're going to see increased demand, and I also think that our government, the newly elected government, is going to recognize that we are in a pretty serious competition with other parties in the world for these resources, these very scarce resources. And I think you're actually going to see money start to come in. It reminds me of the 1980s, when you actually saw money start to trickle in the early 1980s and then go towards building the next generation of mines. So I'm actually quite optimistic. This slide is not meant to be a negative slide. It's meant to say, I don't think we're in a mirage. I think we're going to see good times ahead. We certainly believe that here. From the perspective of a geologist, I would say, if we don't start spending capital on exploration, developing new mines and such, we're going to see increased shortages of these metals, and the world just cannot live like that. They cannot. The demand is there, and it's not going away. All right, let's go to the next slide. Now, this week I've got a bunch of updates because it's been a couple of weeks since we did a presentation. And the game I'm going to play today is to try to get through all these updates before the battery on my computer dies, because I'm out on a patio in an office building. I had some meetings this morning, couldn't get back to my office to do this presentation from there. So I'm going to kind of buzz through things today. I should be able to make it, no problem, but just in case, I might be speaking very quickly. Okay, Snowline announced some news. This is actually a little ways back. It was the 12th of November, and they had some really good results once again from Valley. We'll talk more about those. They also got some news out of one of their other targets called Cynthia, which I'll talk about briefly as well. Go to the next slide. Okay, so you can see here, the company still has a lot of assays to come back. You can see all the dots here. There's pending assays from many drill holes, the ones that have the blue collar on this image. holes that are back are the ones that are slightly darker shades of pinks and oranges and reds than we see in the background, but they fill in some pretty vital areas, particularly up the northwest and even down to the southeast. Let's go to the next slide. One of the cross sections they put in here, which is from the northwest, shows that the mineralization extends well beyond the current perceived pit. I think this tells us a lot. It tells us there's still a lot of upside. I think some of the assays that come back will give us more insight into that. But I think the company will be geared towards resetting or restating, I should say, their mineral resource estimate based on the results that come back. I would expect to see a larger resource, but also obviously an increase in quality as well, especially as they get holes between holes assays back over the next few months. We have a lot of news to look forward to. I really love the way the company's attacked this project. I think they've done it in an exceptional way, very cost-effective way, very systematic approach, and we're seeing the results of that right now. Look at all the assays that are outside of the pit, very long intervals of mineralization that should add considerable tonnage. Look at all those blocks outside of the pit that stand to benefit. All right, let's go to the next slide. Okay, at Cynthia, this is a pretty well-established area of alteration. It's not that far from Valley. It's I believe it's to the south. Anyway, this area of alteration, clearly visible at surface, bright reds, bright oranges, bright yellows, is an area of hydrothermal alteration. Basically, there's a lot of fluids that have come up through the ground, moved through these rocks, and has produced a very broad geochemical anomaly. The company did talus fine sampling, so they basically went around and they took samples of that material that you see shedding off the mountain, and they've identified a very broad anomaly of gold and even silver in this case, which is quite unusual. So this has a little bit different flavor than the Valley deposit, which is gold only, more or less. But they have a pretty broad area, 0.58 gram gold on average in outcrop, which is encouraging, but also 45 grams, so about 1.5 ounces silver. Again, in outcrop, that's the average. Okay, this is a new style of target. It's a new target in general. I would say we should watch this one closely. You know, they got enough work done here, I think, to be able to identify a drill target, say test it properly next year. But this looks like a very robust system. I'm not sure exactly if it's a reduced intrusion or not, but it's a big one nonetheless. Go to the next slide. Now, not far from Snowline, we also have Onyx Gold, who is exploring for reduced intrusions. And this year, the work they did in the field was basically to help refine or define some of their drill targets. And this includes this area, the raw target or vein field. Okay, they did collect surface samples, but they also collected soils, and they're starting to see a pretty substantial target develop. Let's go to the next slide. Okay, here you can see this is the soils in this case are the golden mass. This is over on the left-hand side of this image, but it's really fleshed out a very robust target at golden mask. But over here, you can see some sheeted quartz veining at the raw target. This is just exceptional. The veining that they found in some of these outcrops looks very much like Snowline, very much like Valley. Looks like a very robust target, and I think we're going to have to wait until next year to see it tested. But I would dare say we got another company that's queued up with a very high quality target. So now we have several players. Okay, we got obviously Snowline, and they have multiple targets, even some assays coming back later this year. We've got Sitka, which I've talked about many times recently, but I'll be able to talk more about as I get more assays back. We've got our friends there at Rackla have a new target, more over to the east, more over in the Northwest Territories, but a really robust target. And now we have Onyx, which has a robust target. So I think we're seeing a critical mass develop of these reduced intrusive targets and more of a district scale play emerge. Really good to see this kind of work. Go to the next slide. Okay, Silver 47. This story is about the Red Mountain project in Alaska. Red Mountain, when we first spoke about it, it belonged to a group called White Rock Minerals, which was an ASX listed company, and they did quite a bit of work here for about 2 or 3 years. I'll say they made the discovery, and they were starting to advance it. Unfortunately, White Rock ran out of cash as the market came off a couple of years ago. They ran out of cash. They were not able to advance this project, but Silver 47 managed to snatch this project basically out of receivership and are now, advancing it. They're basically picking up where White Rock left off, and they've had a couple of good news releases just in the past 2 or 3 weeks. One key note: Silver 47 was private, and it's recently started trading. Okay, so that is a good, good for investors to look at. It's a new silver story that could be very interesting to many, many people. All right, but notice this hole that they cut here. This is at its at the Dry Creek zone. Okay, there's 2 main targets they have. I'll talk about that in a minute with a map. But they hit very high grade gold and silver in VMS mineralization along with zinc and lead. I think this looks very encouraging. This is a bit of a step out hole, and it shows this Dry Creek area is open for expansion. Let's go to the next slide and talk about this more. Okay, this property is huge. Okay, so we're just looking at a very, very small part of the overall Red Mountain project, but the 2 zones that have been best explored, best drilled to date, we'll call them the discovery zones, are Dry Creek and the West Tundra Flats area, which are shown on this map. Dry Creek is a VMS that's tilted more or less, not perfectly vertically, but pretty steeply dipping. And then West Tundra Flats is more of a flat-lying VMS system. Are they related? Absolutely. They're in the same host rocks. I think that as the company explores, I think the picture will emerge in here that these are actually directly related. It's more than a coincidence. You have 2 very high grade zinc, lead, silver, base metal, silver VMS right next to each other. It's more than a coincidence. Okay, but let's talk about these drill results at Dry Creek. Go to the next slide. Okay, you can see here hole 106, which is the deeper of the holes here, is actually it steps down along the down dip projection of the VMS system. Very high grades, 2.5 meters of in equivalency, almost 3 kilograms silver equivalent. That's a great result. I think this system is ripe for expansion. It reminds me of some other precious metal rich VMS systems in the general, call it Northwest North America region. Think SK Creek, think Greens Creek, which is a mine operated by Hecla. This VMS system has a smell of a very high grade precious metal rich VMS system, and these things are very highly desired out there in the mining world. These are ones that can generate high margins. All right, so this is a good advancement, but they have more news. Let's go to the next slide. They also put out some results from West Tundra Flats, and equally impressive numbers here: 2.9 meters of a little over a kilogram silver equivalent. Much of that value is in silver. Of course, zinc and lead is very high grade in this as well. Go to the next slide. In this case, the drill hole that they completed is an infill hole between 2 historic holes that White Rock completed. So we basically have a hole that bridges the gap. And this is actually important because when they did their resource modeling, gaps like this were not helpful in the resource modeling. So I think infilling some of these areas is going to end up with a good outcome with the updated resource once it comes out. When that is, I don't know, but any drilling like this, it shows high grades like this: 2.9 meters of high grade, or in this case, 1.47 meters of high grade, 1.4 kilo silver equivalent are going to help. All right, so again, very good results. The company now has its feet on the ground there. It's established its camp. It's got its basically sunk a bit of capital in to get its feet on the ground in this region. I think next year is going to be the year that it really shoots the lights out. I think it has a lot of targets that it's now developed and are ready to test, but also can expand upon these discoveries. Go to the next slide. Okay, Kuya put out some news this week. Very interesting because they tested a new target. This is part of their Silver Kings project in Ontario, but it's in a new area called the Frontier Northwest Zone. The Cobalt Ontario district, the Cobalt Cur Lake region, is a very large silver camp. I mean, it's just an enormous camp, and for historic perspective, Agnico Eagle got their start here. Why is Agnico called Agnico? AG is silver, Ni is nickel, and Co is cobalt. Okay, Agnico. In the Cobalt Ontario camp, just like the namesake, there is a lot of cobalt and a lot of nickel as well as silver. Okay, and in this case, Kuya managed to test this area, and they hit a very, very high grade on one of their first holes. Hit a very high grade cobalt nickel vein. It's got a bit of silver, but it's mainly cobalt nickel in terms of metal endowment. This is encouraging. It doesn't mean there's no silver there. No, this is the kind of stuff you see peripheral to high grade silver as well. So this is, I would call it, a bona fide new discovery in a new area, and it shows just a remarkable potential. Like, these are very hard veins to hit. To see this in a very early stage test of a new target is very encouraging in my book. Let's go to the next slide. This map shows you the location of this Frontier Northwest target. It's well to the southeast of the Cobalt Ontario camp, which is way up in the northwest corner there, in upper left corner. Campbell Crawford is where they got those very high grade assays about a year and a half ago. Now we're way to the southeast. Okay, so this is interesting. They got basically a new discovery in a new area. Go to the next slide. But it's the same style target. Now, these are very technical images, but I'm going to walk you through it. Okay, over here on the left, we have a bit of geophysics that shows a linear structure, so basically a vein-like structure. These deposits, just a little bit of a refresh, occur either above or below the Nipissing diabase silt. Diabase is an intrusive body that underlays much of this region, and they can find these veins just above the diabase or just below. In this case, it's just above, and they tested this. They came and tested this with several holes, and they hit boom, boom, boom. And most, not all, but most of these holes, they have hit visual mineralization. Now, this, that assay they put out in this news release is just the first. I think there's going to be more news to come, but it shows that they are now seeing continuity along this vein. Not only that, they hit another vein as they were drilling down and trying to test that. They actually encountered another vein, albeit just we'll call it a fracture zone with some interesting mineralization on it. So they got this Hammerstrom vein, which is the discovery that they highlight in the headline, but they also have this McElwain vein, which is up high in the drill holes. And they think if that vein is projected downward, they also think that is a potential viable high-grade target. Okay, now, yes, it's cobalt nickel right now. Is there silver here? Probably. Okay, most of these veins, like I said, show great zonation where you go cobalt silver or cobalt nickel, and then you go into high-grade silver along the veins as you go up and down them. I would say this is a bona fide discovery. It'll take some more drilling to find the silver part of the system, but to see these kind of veins very, very early on is very encouraging. Okay, go to the next slide. Okay, Core Assets put out some really strong results from a CRD intercept at their Blue Project prospect in British Columbia. So here we have a CRD intercept on this whaleback. It's not CRD in this case. It's actually, it is skarn. Okay, it is actually close to an intrusion. What's the difference? Well, CRD is when sulfides replace carbonate beds, and skarn is where you cook up the rock immediately adjacent to an intrusion, but then you also mineralize it. Okay, so they basically have demonstrated they have skarn mineralization here as well. It's some very high grade results. You can see 2 holes, 60 and 61, high-grade zinc, but you also have good copper values, which indicates proximity to an intrusion. Okay, so I think this is a very, very encouraging results. What intrusion, what potential for porphyry there is here, I think we'll have to wait and see. But let's talk a little bit more about this. Go to the next slide. I got a couple more images I pulled out of their news release. Okay, so here you can see the spread of targets across this property is absolutely jaw-dropping. It's a huge property, about 6 kilometers from Pete's target, or Pete's North, all the way down through the Pike Valley area, the Jackie area, down to the southeast. There is clearly a very large porphyry or porphyry systems here, and this whaleback area happens to be more or less right in the middle of the whole cluster. So you can see in Sulphide City, whaleback is one of the targets there. So these drill holes, go to the next slide, are shown in a little bit better detail here. You can see the hole 60 and 61 kind of over here in left center. And you can see they've identified a bit of zonation where you go from silver to zinc, probably reflecting the proximity to an intrusion is my bet. But these kind of grades of zinc are very encouraging. It tells me that there's a lot more to explore in this area. This porphyry that drove this is generating really strong CRD and scar mineralization. That's a very good sign. Not only do you have that kind of target, but you have that porphyry target still here, and I'm very anxious to see that tested. You know, what does the company do from here? Look, I think they have some more results coming back. I think there's more news to come back from this past year's drill program. But I also think that this is going to. I would hope that in this market, as we see things turning around and picking up, this attracts attention from some major mining companies. This is the kind of target I can see a major mining company being very interested in pursuing. Okay, so I think these guys have done a good job. It's been a tough market, but I think they've done a very good job demonstrating the scale and potential of this camp. Go to the next slide. This is a cross-sectional view looking at the Sulphide City area. It shows that whaleback area. So the holes that we talked about are, if you look in the dots, the black dots, whaleback is the one over here on the right. It lists the hole 60 and 61, gives you some sense of values there. Look at the scale that we're starting to see, several hundred meters of good high-grade zinc mineralization, zinc copper mineralization showing up. Again, there's a porphyry potential down there at depth. Have we seen, do we know what's there yet? No, but I think that target, that pink, those pink fingers coming up from the lower right, certainly a viable target. There's a lot of metal coming out of the ground here. Okay, go to the next slide, please. Okay, after a bit of a lag in data, we're now seeing some results out of Alpha. Alpha put some good news out, some really strong numbers. They hit 29 meters and nearly 3 grams gold. 4 meters at 7. This not huge long intervals, but these are strong intervals. They remind me of Sukari, which is the deposit that Centamin had recently sold, I believe, to Anglo up in Egypt. So the similar geology, similar type of system. It's an orogenic system, and they're seeing similar grades. They've been picking away at this. They've drilled a lot of holes. I think we're going to see some more news over the next few months, but let's talk about this a little bit more. Go to the next slide. Here you can see all of the targets across the property, a very long strike to this thing. We're talking about probably 7 or 8 kilometers strike along the linear extent of this zone to the northeast. They've tested Hill 52. Some of the results that we just saw are from Hill 52, but we also see some of the numbers coming out of this northeast area, which is really kind of a new area that they've drill tested. So we're starting to see multiple gold discoveries along this belt. How they all connect, how they all string together has yet to be determined, but I think we're going to see more and more news from these guys over the next few months. Good discovery in progress. Let's go to the next slide. Okay, Barksdale talked about some assays they received from the upper part of their hole. Now, I am a director for disclosure, And I brought on Alan Roberts, who's our exploration manager. Alan is overseeing the drilling right now. A lot of people ask on a daily basis, what's going on. The hole is going down, down, down. It's getting close to target depth. Touch wood. I'd never like to jinx anything, but I would say that soon, probably within the next week or two, we should be at target depth. But in the meantime, the upper part of this hole, 24002, encountered what we call the chalcocite zone, the chalcocite blanket zone, and it had some very strong copper results, including up to 4.33% copper. To talk about this a little more, go to the next slide, and I can show an image of it. Okay, so this, I'm going to show one of the sections here. Before you look at the map, the main body of the map here, go up to the inset map, which is at the top there. You can see the blobs. You can see our land position outlined in blue. Okay, but the blobs that are off to the east there, we have the Taylor deposit, but also notice in green there's this Peak deposit, which is a copper skarn deposit that seems to be becoming more exciting. Now, S32 doesn't talk much about it, but it looks like it could be a big thing. Okay, the rumors I've heard, that could be a really, really big discovery. So you have a CRD with a skarn sitting right next to each other, almost like a layer cake. And then look at our ground. Immediately adjacent, we have what should be the extensions of those systems. And the hole that we're drilling right now is inside that little tiny box. So if now we go down and focus on the main body of the map, you can see the trace over here on the right for hole 24002. Okay, that drill hole is going down and it's basically testing an area where the Taylor deposit should project straight onto our ground. And it's getting close to reaching that depth. Now, touch wood, no, nothing happens. We get through it and we have a really nice outcome. But in the meantime, it tested the what we call the chalcocite zone, which is very near surface. So all of these black polka dots here you see are historic drill holes that collectively paint a story about something else that's going on here. Okay, go to the next slide. There is a blanket of copper mineralization, basically at grassroots on the west side of this cross-sectional image, and then dipping off to the east, which is towards the right. Okay, so in hole 2, we see the down in hole 1, we had to back up and re-drill. We see the down dip extent of the chalcocite blanket. This thing is actually proving out to be very, very expansive, very continuous over a broad area. What is it? Well, it's basically about a 0.3, 0.4, 0.5% copper zone that's right at surface. We are looking at this more and more seriously, given we see it in this drill. Now we got evidence the continuity comes clear over. In fact, we're seeing, at least locally, some high grades. What does it mean for the company? Is that what we're chasing right now? No, we're still looking for the Taylor extension, perhaps this Peak deposit extension. But this looks like an interesting target. So we are evaluating this data, and we're going to see how this might play into maybe a new story about this shallow copper mineralization here as well. S32 property, by the way, is that blue line to the right of that blue line. That is where S32 is developing the Taylor mine, the $2.1 billion project that they're currently undertaking. Okay, go to the next slide. Irving. Okay, I haven't talked about Irving for a little while, but we reached a very important juncture. Again, I'm a director of this company as well. Irving has now announced it has formed an agreement with JX Advanced Metals Corporation. You say, well, what is JX? Guess what, guys? JX is part of JX Mining, which is the biggest mining house in Japan. Okay, this is not a little deal with some one-off company or something like that. We have struck a deal with the biggest mining house in Japan. JX is a very serious player. They have a lot of smelters across Japan, and they want to feed those smelters with smelter flux, which is silica. Our business model is to find precious metal-bearing silica flux that can be used in the smelters across Japan. We have now struck a deal with JX Metals. We're going to take this, in a very focused way. They're going to focus on this Omu sinter, which is basically a body of silica. that they can potentially develop into a smelter flux operation. But as time goes on, we're going to work with JX to now start to build this whole basically business model we established of pulling together disparate high grade or higher grade silica sources that we can put together into a stream that we can provide to the smelters in Japan. This is a really cool step, guys. I mean, this is amazing. We basically have an alliance here to develop, to push forward to fulfill our dream. This is what we came to Japan to do. Okay, so this is it's delightful. You know, with JX at our back here, we can get through permitting and get through other aspects of developing this. So I think this is a huge step for Irving. Go to the next slide. Okay, Blue Lagoon announced about a week ago, a little over a week ago, that they have the draft permit. Mine permit doesn't mean it's fully ready yet, but I think sometime maybe early next year is what I'm hearing. They might get the full permit to go ahead and reopen and operate at the Dome Mountain project. If you remember, Dome Mountain does have a resource, I think on the order of 200, maybe 250,000 ounces, high grade gold. It's a vein system. The company really wanted to develop this mine. You know, in the early days, that was their mandate, was to develop this mining operation. It's taken a long time to get the permits, but here we are. We're starting to see some progress. And sometimes these stories that you think, gee, what happened to that? They come back to life because you know, an important event like this happened. So, wish the best of luck to these guys. I hope that we see this continue to progress. Go to the next slide. Okay, Condor received its drill permit for Wainak Punta. Very strange name, but Wainak Punta is a very high grade, in fact, one of the higher grade silver projects I've seen in Peru. And it's located kind of north of Lima, about 8-hour drive. It's kind of up in the very high country, northeast of Lima. It happens to be not too far away from a very large deposit called Antamina. It's about 60 kilometers, I think, southeast of Antamina. Antamina is a massive porphyry, but also skarn CRD. So skarn and CRD. Here we hear these words again, just like I said for core. Okay, here we have a skarn CRD target that we are going to be testing. I am a director, full disclosure. Okay, this is an exciting drill target that the company is now has a green light to go ahead and test. It was the site of historic silver mining going way back in time to the Spanish, very high grades there. There's clear evidence of a compelling large-scale CRD and skarn system here, and I think this, with luck, could be a project that generates some very exciting news very quickly. Is there a porphyry there too? Possibly. Okay. Does our land position cover the entire target? Probably not. Okay. There's some other lands around, but I think the skarn CRD system, the target that's associated with that is accessible and fully within our ground. So I'm very anxious to see. I know Evers wanted to test this for many years. It's nice to see it finally advance to drill stage. Go to the next slide. Okay, I've talked about Copper Core, I think once or twice. This is a company that is exploring in Tasmania, so it's part of Australia. If you don't know, Tasmania is the island south of the main island of Australia, and they are tackling an IOCG system. This is an iron oxide copper gold system. It also has rare earth elements. I kind of discount rare earths, quite frankly, but whatever, copper gold, we'll call it. And it is not too far from a historic mine, Mount Lyell, which was a very large operating mine, very high grade copper gold mine. And these guys, I'm going to stick my neck out here. Okay, these guys put out visuals. When was it? 18th, so a little over a week ago. They put out visuals, or a little under a week, I guess, from some drilling they've done recently that really caught my attention. Okay, I'm I don't know what the assays are, but a few weeks ago, like maybe a month or two ago, they put out some interesting results. 132 meters of 0.35% copper and a bit of gold. I thought that was exciting, but this stuff in this news release looks really interesting. Okay, go to the next slide. Okay, you can see this Jukes target. Jukes is, if you look at the long linear trend of claims they have there, it's kind of a little bit below the center point of this. Okay, Mount Lyell happens to be the red box there. So we are within spitting distance of a massive copper deposit, 3 million tons of copper metal and 3 million ounces of gold. Okay, so this is elephant country when you're hunting for IOCGs. And this Jukes project is delivering visuals in drilling that really look like Mount Lyell. Okay, I am not. I mean, this isn't just alteration or da 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 da. No, this is really encouraging stuff. Look at the core photos. Now, I don't know what I haven't seen the core up close myself and looked at every box and can tell you more than what we see in the news release. But boy, when I see chalcopyrite like this, like big stunken veins lacing the rock with chalcopyrite, a bit of pyrite in there too, but that looks good, especially that pink red stuff. That's albite alteration, or K feldspar probably alteration. Sorry, that's just intense as all get out. That looks incredible. Okay. Got to wait for assays. Don't know what they might be, but that looks a heck of a lot like the Mount Lyell deposit. And these guys may have just absolutely nailed it here. Wouldn't that be delightful? Yeah. Okay, go to the next slide. Okay, Lion One has been focused like a laser on trying to minimize ore dilution and keep their drifts and mines and development going in the direction of these high grade gold veins. And one of the keys they've used is to use roscolite. Also, what the heck does this mean? Okay, well, roscolite is a mineral. It's a bright green mineral. It's kind of olive green or forest green, and it is very closely associated with the gold. The veins lacing the rock will often have these little green streaks that are easily identifiable by eye. Now, in these photos, of course, you can see the gold there. So, okay, great. But oftentimes you can't see much visible gold. But what can you see? These little veins. And if you see the roscolite, it usually points the way to veins that will have gold. They're basically, it's an indicator, a visual indicator that enables the company to start following more closely where the gold is heading in this underground labyrinth of lodes. Now, the other thing that came out in this news release, Sergio is back on the team. Sergio has returned to Fiji. He's going to help the company, get more horsepower as far as grade control and stuff like that. They've also brought on some geologists who have worked for Newmont in recent time. Okay, so we have a really strong team starting to show up there that I think will help more and more to make sure the company stays on the gold. Go to the next slide. At 42%, I think I can make it. Woohoo! Kingfisher. Okay, Kingfisher. A few years ago, we were looking at the Cloud Drifter project. The company has totally remade itself. We're all of us here at Crescat are big fans of management here. That doesn't look. They did a hard pivot. Okay, that happens sometimes. Okay, they picked up a project up in the Golden Triangle, and it's a heck of a good project. Okay, it's right across more or less Highway 37. They call it the Highway 37 project, which is really the only highway that kind of goes up through the Golden Triangle. And so it's not that, it's not terribly remote, but they have a huge number of targets that they've identified. I'm not going to read through all of these, but you can see the list here. We got 6 high quality copper gold targets to test here. And there's a bit of data with each one of these. Some of it's historic, some of the data is new data that they've collected. Every single one of these looks like a compelling target. Go to the next slide. I can walk you through a few of these images, just high level. There we go. Okay, so here you can see a cluster, 3 targets: Williams Porphyry, Upper Hank, and we all have the Lower Hank targets. The geochem screams a big system, huge footprints to these things. But look at the numbers that we have. Each one of these little boxes goes through and highlights either drill holes, sometimes it's trenches too, I think, in a few of these. But it says there's a lot of potential with these targets, and the company has assimilated historic data with their newly gathered data, and they've really built a compelling case for a quality suite, we'll call it, of drill targets ready for next year's program. Okay, let's go to the next slide. I think I got 2 more of these type slides. There we go. Here you can see the ME target, West ME target, and then up at the top there's the Cliff target. Again, there's a bit of information here, but in the case of ME, West ME, there's a muted geochemical signature. There's a lot of stuff that's sloughed over the top of this, but look at the alteration you see. I mean, that photograph on the right-hand side, wowza. I mean, that's just, the rock is absolutely hammered through there. You can imagine with that kind of cover of trees and whatnot, it's a bit muted to actually get, an expression of the underlying rocks, through soil sampling stuff. But the alteration speaks for itself. That is a humdinger of a target. All right, so I'm really anxious to see what they come up with here. Go to the next slide. And then I think, we have one more here. Here you can see the Cliff target a little bit better, but then it kind of, they kind of got a hoop around all of these targets. This DM target and this Mary deposit all together, they've lumped into one big system. Again, there's some highlights of historic drilling and trenching and stuff like that. Please take time on your own to read through. I don't have time today to go through it. But there's one more photograph I want to show you because I think this is important. Go to the next slide. This was in the news release, and I really like this image because they've taken pieces of core from some of their targets here, particularly this Williams porphyry. Okay, and it does have a fair number of drill holes in it, and they've kind of cut and polished the rock so that it's presentable. And then over here on the right-hand side, we have examples of other alkaline porphyries. Some from, one from British Columbia, not far away, Red Chris, down there in the lower right. And then 2 of those, Acadia and North Parks, are actually from Australia. But they're a similar type of porphyry, similar alkaline porphyries. And just look at the alteration and styles of mineralization you have there, and then compare it to the Williams porphyry. I think they have, just my queasy gizzard, seeing bornite and chalcopyrite like this, and intense potassic alteration. That pink stuff speaks volumes. I think they have a heck of a good system here. I think other porphyries of the 6 targets they have, all of them display this style of mineralization. I think they've done a really good job of showing the strong similarities. By the way, all of those deposits over here on the right are world-class tier 1 assets, every single one of those. Okay, so I think they have what looks like, potential to find similar deposits here. Highway 37, I'm in. Let's go. Next slide. Okay, Brixton put out a couple of news releases since our last video. They're both from Trapper, and they talk about the high grades within broader intervals of lower grade mineralization at Trapper. This is part of their Thorn property. There's a lot of targets across here. Of course, Camp Creek is the big porphyry copper center that they've drilled, and they have enough data there. I think they're starting to see, a sizable deposit take shape. But this Trapper gold target, they've been chipping away at in the background for about 3 or 4 years now. These are strong results. They add to the story. Okay, go to the next slide. I want to show in the map what we're talking about. Is the deposit absolutely huge? Not absolutely huge. Okay, it's about maybe 500 meters along strike from northwest to southeast, 200 meters wide, more or less. Okay, and it should go down plunge. What intrigues me about this is the fact that they keep seeing high grades in this over and over and over again. Okay, this is in my view, a variety of an alkaline gold system. And when I see the core photos they present and such, I think that there's more to this story. Now, I don't know exactly where the plumbing is or the high grade might be, but boy, when you start to see gold popping up over and over and over again in a core drill program, to me, it's like Tuvatu in Lion One or something. You know, there's more to be done here. Yeah, I think as a low grade project, this one will kind of struggle given its location, but the high grade I think needs to be focused on. Go to the next slide. And what I mean by that is these little veins, they're not big veins, they're narrow veins, but they have just VD scattered all through them. And that reminds me a lot of anything alkaline like Lion One or whatever. Okay, so I think I hope the company kind of picks this apart and identifies the structure. Try to figure out where the main structures are that might host the high grade mineralization. Okay, go to the next slide. Okay, I think I'm getting close to the end. Maybe this is the last slide. PJX did their drilling or got quite a bit of drilling done. This is down in southern BC. Sorry, I don't mean to jump ahead, but this is testing for Sullivan style deposit in southern BC. They found some really nice float samples earlier. I guess it was late last year, but early this year, they put out some news. And look, they drilled a number of holes. And in my view, they have, quite frankly, made a discovery. If you look at the core photos down here, they are seeing zinc and copper mineralization, probably bedded, in these sedimentary sequences. Is it ore grade, like thick intervals? No, it's kind of skinny right now. But that to me looks like SEDEX mineralization. Okay, I'd love to say that every time you walk out, you can make a discovery. Sometimes you have to inch into it and figure it out. Okay, this year I would say the company has at least tagged some of this SEDEX mineralization. They clearly have a big system. Almost all of the holes hit some form of sulfide and sedimentary form, one form or another. Did they find 10 meters of high grade zinc on this program? No, but is it there? Well, that looks like you should follow up and do some more work. Okay, I think the company has pretty good cash in the bank. I'm pretty sure they do. And I hope they can come back and follow up on these exciting results. All right, so I think that's it. Go to the next slide, and that's it, right? Okay, I did it before my battery died. Okay, hand it over to you.
All right. Thanks,
Nice
Clinton.
work, Quinton.
That's it's great to be back live, and I think we're gonna, hopefully cross our fingers, be able to continue doing this live. There will potentially be a replay available, but we can't promise that. Live is the main show. We're going to try to do some post editing for compliance purposes so that we can in fact also post the replay. But we got this SEC marketing rule that we have to adhere to, and it's got to go through compliance. I have never been more excited about the setup and the opportunity for getting into precious metals mining stocks today. We've shown it to you in our research, and we've shown you the setup for the great rotation out of these overvalued mega cap tech stocks and the overvalued large cap growth in general. The S&P 500 relative to the gold mining industry has probably the best setup that I think it's ever had. And we've shown you those parallels in 1972, in early 2000, even in 1929. Yes, we can even go back that far and see the same kind of counter-cyclical setup and relationship that you can have where gold mining stocks can come up at the same time as you have declining metal prices. Sometimes there's gold revaluations going on, like with FDR, and sometimes there's inflationary pressures like in the 1970s, and sometimes there's tech bubbles that are extraordinary that are bursting, and we think we have all 3 of those potential things going on today. The setup is extraordinary. If you're interested in getting positioned for this type of a setup, I highly encourage you to reach out to Merrick. He can be emailed, he can be phone called. He's very accessible, and we'll walk you through what it is that we're doing here. Look, that's all I have for today. Tavi, any concluding comments from you?
No, it's great to be back. Thanks everybody for watching this. We're gonna be back. Kevin, did we say in 2 weeks? Is that right?
I think that's the main plan now. Is we're going to be going every 2 weeks on Fridays, and try to stick to that plan.
There you go. Okay, I just want to confirm with. Anyways, so we'll be back in 2 weeks. So be attuned. If you highly suggest you to subscribe to the channel so you can get notified of the upcoming video. But if you have questions about Crescat, I also suggest you to speak with Merrick with his information on the screen. But thanks everybody. Looks like things continue to move in the right direction, at least with gold prices, and so I expect things to continue to improve fundamentally for most of the companies in the mining space as well, given what's going on in the metal space. All right, well, that's it. We'll be back in 2 weeks. Take care, guys. Have a good one.